Rohit, I know you've liked this name and have recommended it, even though you've had to take down the price targets. Do you like what you hear today?
It is encouraging. I think Snap is one of those companies that has been burning cash at a rapid clip. They hired very aggressively last year. They acquired a couple companies. I feel the steps they are taking today, almost $500 million in run rate cost savings for next year. I think that's the right move. Reducing some of the moonshots, reducing the spend on that, that's also the right move. Today, cash burn needs to go down. Cash flows need to rise. If this company can show that they are going to accelerate cash flows next 3 to 6 quarters, I think that's the time to start buying the stock here.
Eric, I know you don't. I don't think you own Snap, but you own stocks like this, right? That are growth stocks that are having to cut jobs and restructure their businesses to focus on cash flow and profitability, and then we get into this quandary, right, of how to balance profitability with growth and whether this is all coming at the expense of the future. What do you make of it?
Well, I think it's the right thing to do, Sarah. Absolutely. I don't own it, though, and I'm not tempted to own it after this cut. I mean, they're basically, what do they have to lose? They're kitchen sinking this. Now's the time after whatever it's been, 3 or 4 missed earnings reports in a row, to obviously whack headcount. I think a lot of other tech companies have done this or will need to do this in the next 6 months. Let's face it. I mean, everybody was probably over hiring. After the COVID boom, at elevated compensation levels as well. So they need to cut back. But, balancing growth and profitability, the right stories, even without profitability yet, the market is good at sniffing out which stories will actually play. Snap's story, though, is one of a confused management team basically trying to accommodate IDFA and kind of get a story going. So confused stories don't work. Proper stories, whether they're growth or profitability stories, definitely still play.
Why do you disagree with that, Rohit? Because you have, even in the past, I think with us, raised the issue of management credibility, and yet you're still a buyer.
There's some management kind of shuffle going on right now. Management credibility is with regards to visibility and being able to forecast what the business would look like. I think management credibility is on that one particular area. I feel the innovation capabilities that management has been able to do, that Snap has been able to layer on new areas of monetization, be it maps, be it videos, be it vertical videos, all those things. They had Instagram before, almost an existential threat. People are overly focused on TikTok right now. So I feel management has been able to carve their way around being a more enduring, sustainable business. All they need to do is get the right set of profitability. And now I think with the restructuring, we are getting there slowly. Macro headwinds would fade, hopefully, in the next 6 months. And then we have this nice little inflection in fundamentals with accelerating revenues and improving profitability. And you get a multiple re-rating. So 3 things going in their favor probably by early next year. So there is some time left for them to prove out what they're doing is going to play out the way they want it to be. But I feel positively on what they're doing right now.
Yeah, well, it does seem like they get hit by macro factors worse than their competitors, like a Meta or an Alphabet. Eric, final word to you on growth stocks, because you've come on before and you have made the point that you think we've seen the bottom, all the bad news is factored in. But here we are with interest rates on the rise again. 10-year yield is back above 3%. NASDAQ is back to underperforming. So are you rethinking that call?
I still stand by the June 16th bottom that I've spoken with you about before, Sarah. I think what's interesting is that even with the pullback in August, NASDAQ is still up something like 11% since the June 16th lows. Things like ARK and XBI, the ETF for biotech, are up even more. So yet we have a lot of the same bearish sentiment now back that we had in mid-June. Put call levels elevated, investor sentiment really sour right now. A lot of hedge funds, according to prime brokers, are not exposed to growth. They're much more exposed to value. And yet, even though this is turning out to be a negative August, growth has actually outperformed value in the month of August. So I think it's, for the same reasons that when we get, so pessimistic, there's nowhere to go but up. That's one of the reasons I'm optimistic. Another data point I'll share with you, Sarah, is that if you go back and look at 1981-82, which was sort of the height of the inflation scare, from May 81 to August of 82, the NASDAQ dropped 29% from peak to trough. We dropped, the NASDAQ, from November till June 16th, dropped 33%. So in about half the time, we dropped more than in the throes of the biggest inflation scare of our time. So, and once the dust settled in 82, in August of 82, the NASDAQ rallied 106% over the next 10 months. So
that's what you're bracing for.
I sure hope so. We'll see.